Hi students, welcome to Sunil's tutorial. I'm Sunil Milwani and today we'll be doing this chapter called as internal reco. We are going to do question number 8 in the books of Paradise Limited. Journal. Let's keep our rules here. It is observed that a new project launched by the company has not succeeded even after 3 years of marketing. The management is of the opinion that the assets and liabilities are not valued correctly. Also finds it difficult to raise finance. To overcome this situation, the scheme of reconstruction by the directors approved is as follows. Salient features of the scheme are as follows. Plant and equipment having a book value of 80,000 is obsolete. This is sold as scrap for 16,000. Sold. Money is coming in. Bank account debit. Sold. Plant and machinery is going out to plant and equipment. Right now they are saying that it is sold for 16,000. It had a value of 80,000.
64,000.
This is going to be capital reduction account debit. $64,000 being plant sold. The auditors have pointed out that depreciation on plant is not correctly provided to the extent of 40,000. Now, guys, if I provide depreciation on plant, the value of plant will go down. Value of plant will go down means asset is going down. Asset going down means capital reduction on the debit side. So this is capital reduction account debit to plant and equipment. Amount is 40,000. Being plant depreciated. Next. Stock includes items valued 48,000, sold at a loss of 50%. Sold. Money is coming in. Sold. Stock is going out. Stock is of 48,000. It is sold at a loss of 50%. That means it is sold for 24,000. Capital reduction account debit. Being stock sold. Next. The present realizable value of investments is 56,000. Now investments are given to you as 1,20,000. That means the value of asset is going down. Value of asset is going down. That means capital reduction on the debit side. So this will be capital reduction. Yeah, you want to ask me something? Liability. The present realizable value of investments. Investments are on the asset side of the balance sheet. Capital reduction account debit to investments. Right. Now in the balance sheet they are given to you as 1,20,000 and here this is 56,000. That means 64,000 being assets revalued. Next. Dividend of preference shares is in arrears for 3 years. This amount is not payable. Now, do you have dividend in the balance sheet? No. Is it payable? No. The entry is not there in the balance sheet. I am not paying it. Therefore, there will be no journal entry for it. Next, let's move on ahead. All losses and fictitious assets have to be written off. Assets written off, capital reduction on the debit side. Capital reduction account debit. 2. Publicity campaign expense. Publicity campaign expense is 1,60,000, and then you have 2 profit and loss. Profit and loss is 2 lakhs. So this is 3,60,000 being expenses written off. Right. Next, the expenses paid for forming and implementing the scheme are 8,000. Paid, money is going out, right? Back on the credit side. Now we don't have implementing scheme in the balance sheet, so we cannot use that in the journal. Instead of that, you will use the word capital reduction. So this is capital reduction account debit to bank. The amount is 8,000. Being implementing scheme written off. Next, the paid up value of equity share to be reduced to 2 per share. Now, at the moment the value of equity share is 10. Liability going down, capital reduction on the credit side. So this is going to be equity share capital account debit to capital reduction. Right? I have how many equity shares? Equity share capital is 4 lakhs, each of 10 rupees, so 40,000. 40,000 and each of them is reduced by 8 rupees, 3,20,000. Being equity shares reduced. Right? Next. Preference shares to be reduced to 5 rupees per share. Now the present value of preference share capital is 10. That means it is reduced by half. Liability going down, capital reduction on the credit side. So 10% preference share capital account debit to capital reduction. Right? The amount is going to be 1,20,000 being preference shares reduced right. Next, they also said that creditors are settled as follows: 20% immediate cash payment, 40% cancelled, and the remaining 40% are paid by issue of 16% debentures. Right? Now, they are saying that creditors are paid, debitor receiver, creditors account debit. How are they paid? To. They are paid by cash, so to bank. Now creditors amount as per the balance sheet was 2 lakh. They are saying that 20% are paid cash immediately, so 40,000. Next, they are saying that 40% are cancelled, so that's to capital reduction. Liability going down, therefore capital reduction on the credit side, 80,000. And the remaining 40% paid by issue of 16% debentures to 16% debentures 80,000 being creditors paid. Next, other current liability includes 40,000 payable to directors towards remuneration. This liability was cancelled. Now, other current liability, okay. Let's make the entry for this. On the balance sheet, you have other liability. Liability is going down, capital reduction on the credit side. So, other liabilities account debit. To capital reduction. How much is it? They are saying that 40,000. Right? This is being director's loan written off. Next, let's move on ahead. A call of 3 per share on equity shares was made and was received. Now, how many equity shares do I have? I've got 40,000 equity shares. Make the call and receive the call. Receive the call. Money is coming in. Money is coming in. Bank account debit to equity share capital. I'm making a combined entry. I could have done it this way also. Bank account debit to equity share final call and then equity share final call to equity share capital. Or I'm directly making a combined entry, single entry. 40,000 shares, 3 rupees per share, 1,20,000 being call received. Next. Bank overdraft is to be paid to the extent possible. Now, bank overdraft to be paid to the extent possible, for that I need to know my bank balance. Now, as per the balance sheet, there is no cash or bank in the balance sheet. Let's look at our journal. Bank on the debit side, 24,000.
16,000.
Bank on the debit side 16,000, bank on the debit side 24,000,
40,000.
bank on the credit side 8,000, bank on the credit side 40,000,
Negative 8,000.
we have bank on the debit side 1,20,000.
1,12,000.
We have 1,12,000 remaining. Now my bank overdraft, if you look at your balance sheet, is 1,20,000. So I can pay off 1,12,000 since I have bank figure 1,12,000. Pay, money is going out. Bank overdraft account debit to bank. 1,12,000. 1,12,000 being bank OD paid.
No capital reduction in this
No,
8,000.
you just to the extent possible. They haven't said that it is to be fully paid. Right? Next, let's leave space for journal entry and make capital reduction account. Right? Capital reduction on the debit side to plant and equipment 64,000. Capital reduction on the debit side to plant and equipment 40,000. Capital reduction on the debit side to stock 24,000. Capital reduction on the debit side to investments 64,000. Right? Then you have capital reduction on the debit side to publicity expense 1,60,000 to P&L 2 lakhs. Capital reduction on the debit side to bank 8,000. Capital reduction on the credit side by equity share capital 3,20,000, right, by 10% preference shares 1,20,000. Then you have capital reduction on the credit side by creditors. Amount is 80,000. Right? Then you have capital reduction on the credit side by other liabilities. Other liabilities is 40,000. Then you have
That's it.
I missed some entry.
No.
3,20,000, 1,20,000. Some of these have
5,60,000.
both sides are same.
Yeah.
Tally.
5,60,000.
5,60,000. 5,60,000. Let's make the balance sheet, guys. Balance sheet as on liabilities, rupees, assets, rupees. Let's start. You have authorized share capital. Authorized share capital not given to you. Question mark, question mark, question mark. Right? Next, you have issued and subscribed capital. Issued and subscribed capital. You have 10% preference share capital. 10% preference share capital was 2,40,000. It has been reduced by 1,20,000, so you have 1,20,000. Then you have equity shares. Equity share capital is 4 lakhs. Now equity share capital is reduced by 3,20,000, so 80,000. Yeah, we have issued another 120. So 80,000 plus 1,20,000, that's 2 lakhs. Right? Next, reserves and surplus. In reserves and surplus, nothing. Then you have secured loans. In secured loans, you will have 15% debentures. 15% debentures is. Do we have 15% debentures?
No.
In fact, we have issued another 16% debentures. So 15% debentures, 4,80,000 as it is. We have issued another 16% debentures, which are of the value 80,000. Then you have unsecured loans. Nil. Then you have current liabilities. Under current liabilities, you have creditors. Creditors is 2 lakhs and the entire amount has been written off. Nil. Then you have bank OD. Bank OD has been written off to the extent of 1,12,000. Only 8,000 remaining. And then you have other liabilities.
120.
Other liabilities have been written off to the extent of 40,000, so 1,20,000. Let's see the asset side, fixed assets. Fixed assets. In fixed assets, you have premises. Premises is given to you as direct amount, that's 3,20,000. Then you have plant and equipment. You have entries with plant and equipment, 520 minus 80 minus 40. That's it. So 520 minus 124 lakhs. Right? Then you have investments. Investments, we don't have an entry with investments. Investments, 64,000. So that means you're going to less it by 64,000. 1,20,000, so 56,000. Then you have current assets. Amongst current assets, you have stock, debtors, deposits, bank, publicity expense and profit and loss. Expense and profit and loss. Now, stock is 1,44,000 and you have stock on the credit side 48,000. So 1,44,000. So that's going to be 96,000. That is going to be 96,000. Then debtors is 96,000. Do we have an entry with debtors?
Probably
No.
No, sir.
No. Next, so that will remain 96,000. Then deposits will remain as it is 40,000. Bank should be nil. Publicity expense should be nil and P&L should be nil.
10,08,000.
10,08,000. Right? This finishes the sum. We stop this here for the day. Thank you very much.